Well, hello and welcome to Breakout Trading. It's the show where we talk about, well, of course, breakout trading. It's in the name. And today we're going to be talking about two of the most popular markets, indices and currencies / Forex. Which is the best for trading? Well, if you want to make profits, this is an excellent question to ask. And we're going to reveal the answer today. But joining us first, before we even get into that information, is Mr. Thomas, Mr. Breakouts himself, Tomas Nesnidal. Thomas. Sorry about that intro. I stuffed that one up, didn't I? Welcome, Thomas, Mr. Breakouts.
Hi.
I need to practice more.
I missed the intro because my computer actually frozen, so I missed the intro, so I didn't know what happened there. So
Oh, okay. Maybe I shouldn't
I'm
admit
here.
to stuffing it up. Yeah. Oh dear. Where are you today,
Okay, guys.
Thomas?
Hi
You
everyone.
look like you're in a new
I'm
location.
back to I'm back to Kuala Lumpur, back from Ho Chi Minh City, which was absolutely amazing, and now back to the base in KL and ready to deliver another great episode of the Breakout Trading Answered.
Yeah, excellent. Now, what I did say at the start, Thomas, which I think you missed, is that we're going to be talking about two of the most popular markets, I guess, indices and currencies / Forex.
Yes.
And which one is best for trading and why? And you're going to give us the answer today, aren't you?
I'm going to give you a different answer. And I think this is a very, very important topic because, I think both of us, we heard so many discussions about Forex and currencies versus E-mini and indices. And, I have to laugh because most of the time when I'm listening to discussions like this about coins and against how do you say it? Coins and pros and cons for each category. People just bring up very weird arguments like platform, broker. Like, who cares about broker or platform if you cannot develop a good profitable strategy and if you don't have enough of an edge on your side, right? Like, doesn't really matter. So people are always like, oh, I picked this one because of this platform and this broker. I'm going to give you real, professional, serious reason, which will show you based on data what is it that I believe you should pick if you want to make extra money. And that's what this episode is going to be about.
Well, I like that. How to make extra money, because I guess we're all in it, or most of us are in trading to make money. Some people have other reasons, I guess, but so all those traders who want to make some money, this is a good show to listen to today. Thomas is going to tell us why in a moment. So, as I mentioned, indices versus currencies, Forex. Take it away, Thomas. Are you there, Thomas? Can you hear us?
Yes.
Yeah.
Yes, I'm here.
Yes.
Can you hear me?
I can hear you. Yes, we got you.
So let's move to the next slide. Forex or futures indices. This is a very, very common question. And again, the answer is not MetaTrader and Piccolodes versus a different platform and whatever. The answer lies in a completely different question. And this question needs to be asked properly and answered properly if you want to maximize your chances for success. So let me ask you guys if you can figure out this question. So the question is on the next slide, and this is the question that you need to ask. And then I will explain all the details. And the question actually is, what is the most decisive factor when it comes to picking markets to trade? And when I say to trade, I'm talking pretty much about the usual trading style, like trend following, even kind of mean reversion. But I'm not talking about scalping or arbitrages or any crazy techniques out there. Just a regular trading for regular guys, regular traders like Andrew and me. What is the most decisive factor when it comes to picking the right market?
Okay, so
And
let us know in the chat. What do you think?
That's the clue.
What's the most decisive factor
answer
when it comes to picking markets to trade?
Yeah.
And Pete, Neil,
And Andrew, for For some reason, Andrew, I cannot see the chat today in my browser. I don't know why. So if you can read them aloud or put them on the screen, that would be helpful.
Okay. Yeah.
So what is the most decisive factor?
Pete,
Liquidity.
1234 says liquidity.
Peter, only if you trade billions. Do you trade billions? Smooth volatility. Neil, that's closer. That's closer.
Mhm.
Yeah, volatility. That's closer.
That's all we've got in the chat so far.
Okay. So I'll give you the answer. Easy peasy. The answer is on the next slide. And the answer is trendiness.
Trendiness.
So if you have a market, you can have a bunch of liquidity, but if that liquidity is not moving your market and it's not really establishing good and reliable trends, you will not make money. Even volatility, I agree, volatility and trend is pretty much interrelated, but again, you need a trend, you need trendiness. How we make money? We make money because markets move certain direction. How do we mostly lose money? Any educated guess? How do we mostly lose money? What is the opposite of trendiness?
Anyone in the chat? I think there's a little delay here. So the opposite of trendiness. Can I guess?
Yes, please.
Choppiness. Choppy markets.
Yes.
Range, Pete said.
Yes.
Yep.
Choppiness.
Pete's got it.
Choppiness.
Range.
Yes, exactly. Brilliant.
Range bound.
We can make money in strongly trending markets, and this doesn't necessarily mean that we need weeks or months long trends. We just need a reasonable movement. Like in normal trading, sometimes you need 2-3 good days, or sometimes even a couple of hours of good trendiness, and you can already make money. But it's really, really difficult if you have market which goes a little bit up, little bit down, little bit up, little bit down, little bit down, little bit up, and overall you don't have a stable, predictable, smooth, good quality trend. It's super, super difficult to make money. And then it doesn't matter what broker or software or platform you have. Doesn't matter, because how do you make money out of choppiness? Unless you figure out some very, very special algorithm, which most of us cannot, I cannot, then you really need a trend. So this is what we'll be talking about, and I'll give you some actual data. So my first advice is, when you're choosing between Forex or mini futures, E-minis, indexes, the first advice is on the next slide. It's a strong one. Please ignore the hype. We're in a trading business where we need to be driven by the data, not by the hype. I don't care who uses which broker or whatever. Just show me the data, which very pragmatically explain to me where I have the highest chances to make some money, because I can spot obvious trendiness, which maximizes my chances of riding these wonderful waves and making money. And the data that I prepared are very simple. Now, just don't get me wrong, because there's a bunch of ways to crunch data and interpret data. And I'm not saying this is the best way, and that's not even the purpose to go into academic discussions. But I want to show you something which is very common sense. A normal guy can do this and see immediately very, very, I would say, very persuasive, very unequivocal proof what I believe is the choice to go with and why. So let's get to the data. So what I really did, I took futures currencies. Well, this episode is not just about Forex. Just let me make it clear. This is also about futures currencies. It's called currencies versus indexes or indices. So I picked futures currencies, and futures currencies are highly correlated with Forex. So there's a super high correlation. So it's almost similar. Just the principle of trading futures and Forex is a little bit different. But to do the job, this is absolutely sufficient. And now what I did, I took 15 years of the most common currencies, or all the currencies that you can use as futures, and our 5 indices which we have as E-mini as futures, EMDES, which is so basically the first one is Australian dollar, British pound, Canadian dollar, euro currency, Japanese yen, and Swiss franc. The other one is E-mini S&P 400, E-mini S&P 500, E-mini Nasdaq, E-mini Russell 2000, and E-mini Dow Jones. And now what I did is just pretend that you will do a test, and in this test you will buy and open of every daily bar, and then close, exit at the end of the day, and you do it on regular trading hours. I will go to extended session a little bit later, but regular trading hours, just the normal trading hours, for example, for indices is it is 8:30 to 15:15, and for currencies is, I believe, 7:20 to 2 p.m. or something like that. So just regular trading hours. Now, this is a very simple test to see how much of a trendiness we potentially have. And then you can do the same thing on the opposite side, on short side, but it's basically the long result, which you will just flip. Would be like what would happen if you short it on every open and you close the exit at the end of the day again. Now, what would be the worst result that you could get? Like worst one. Let's if you buy every day and exit every day in a 15 years, what would be the worst result you could get?
What would be the worst result you could get? I'm not sure what the question is. What do you mean?
Yeah,
It'll be a losing strategy, right?
What would be the least desirable result? So least desirable, well, losing, yeah. So if I buy and if I go long every single day for that particular day, and if it's losing, then it basically means that it's a short trend, probably short trending market. So I just flip long to short, like I have here, for example, Australian dollar. It would this way in 15 years we would lose $15,000. But if we flip it and we trade short instead of long, we make money. So that's not yet the worst. There's really undesirable outcome. And what that outcome would be? Yes, Neil, genius. Yes, exactly. The least desirable outcome is anything around zero, because if we have around zero, then probably the trendiness is not so strong. Yes, we can have a lot of academic debates. What is the development and quality, and what it looks like, the trend. But overall, like a strong trendy market would even give us a very positive plus result, or very negative. Very negative is good as well, because as I said, we can just flip it to short trading, and then instead of going long, we go short and we short trades. But a strong, any high, extremely high or extremely low number very quickly shows us the strength of the trendiness. And similarly, it comes also with average trade. So if average trade is close to zero, that means there's not really strong trendiness. And in this table, we can see that actually euro currency seems to be quite bad, because they're obviously going up and down and doing what it wants. But overall, it's not about going into subtle details. It's about seeing the overall tendency, currencies between indexes. And just by one simple glimpse, we can already see that the trendiness of indexes is incomparably higher. Like, these markets are just trending, period. We achieve numbers that we can barely achieve with Forex here. And here is 33,000 in Swiss franc we very likely have, just because of couple of past bans and events and unusual situations. But overall, we can see that indexes give us way more trendiness. The average trade is sometimes 3-4 times higher than on Forex. and overall the trendiness is way stronger, which very much reflects the nature of Forex. And the problem, the specificity of Forex is there are too many players doing too many different things. That is even if you have a close look on a Forex chart, you can see that even inside of a quite okay trend, inside of it you have a lot of choppiness and going up, down, and real battle of banks against retail traders, against brokers, against everyone. And overall it's a difficult market to participate on a good trend, because by its nature and liquidity, there's already so much battle going on that it's hard to compete with indices. And this gap between currencies and indexes gets even bigger when we talk about the whole session trading, because then somebody can say, okay, but Forex I can trade it 24 hours and there are bigger trends during 24 hours. Yeah, I can do this with E-minis pretty much as well. And now look at the difference. Like the difference is really, really, yeah, I agree that adding night session obviously does help to Forex as well. Like it does help. So that's a fair argument. If I trade a whole 24-hour session with Forex or currencies, I'm significantly improving the trendiness. So I agree, if we take into consideration the whole day, not just regular trading session, and we ignore some weak markets like Aussie, sorry, Andrew, Aussie's dollar, and Swiss franc, we're getting to some okay numbers. But again, we easily beat it with indices, easily, like especially markets like Nasdaq. We go so high, the trendiness is so obvious and so strong with some of these markets. So I think this is a very, very simple analysis, not perfect by any means, but it gives a lot of overview and idea how much difference we talk, how much noisiness versus trendiness we talk when we talk about currencies versus indexes. And which one would you choose? Well, it's up to you. I would completely ignore brokers and platforms and meta, not meta traders. I just would go with simple analysis, asking where are my chances to make a lot of money the easy way. That would be me.
Yeah. So you focused a lot there on the average trade, but can you talk a little bit about that column next to it, the average net profit drawdown? Because that's a really big difference there too.
Yes. So this one, what I also did, I calculated the net profit drawdown ratio. Actually, I didn't really calculate it. When I was doing this analysis, I used multi-charts, and multi-charts I used fitness function net profit drawdown ratio. So just to get this number and see it as well.
Right.
So this is the outcome of the test that I did. But what is really obvious here as well, because of course this is another metric which absolutely perfectly proves the point how much of a trendiness versus non-trendiness we have. So basically, if we have a good trendiness with some pullbacks, we still get a positive net profit drawdown ratio. So if you go up and then have some drawdown, but then you go up again and the drawdown is lower than the previous trend, then it's a sign of healthy trendiness again. And usually if you start getting some good numbers like 2, 2.5, 3, that's really, really good. Now, this is another very not really good thing about Forex, that we're around zero. So around zero, it means that it goes up, but then it maybe returns and then, so overall, it again goes more sideways. Like there's no clear path, clear trend. Whereas with futures, indexes, we can see there is this tendency just to go somewhere, correction, go somewhere. And again, it's easier to pick up on these trends and on these movements. So overall, again, less noise. So whatever metric, key metric we look at, we can see that there definitely is less noisiness, way more trendiness. And we can do this just by opening the charts and looking at charts. We could do that as well. But I like seeing numbers and like seeing some bigger period as well, like 15 years. And this would be my pick. It's just easier. It really is easier. Now, to give you also, sorry, to give you also one more argument why I believe that starting with indices or indexes would be easier. From my experience, and I believe Andrew will confirm this, creating breakout strategies is incomparably easier on indexes versus currencies, like night and day, and night.
Definitely.
It's almost two opposite sides of the same scale. Like if you want the easiest path, go with indexes. If you want the hardest path, go with currencies.
Yeah. We got a comment in the chat from Neil NQ. I think was that one of the past episodes when we were doing the index month, and I think Neil was talking about NQ. He loves it. Yeah. All right, Thomas. So no questions about that. It's really sorry.
Is it clear? Yeah, I was about to ask if it's all clear.
Yeah, no questions or comments in the chat, so you can continue.
So let's have some. I want to give you some examples of strategies that I built for breakout trading strategies that I built. So all these breakout strategies are actually from this book, Breakout Trading Revolution, where I also talk about the framework and process and model that I use to build breakout strategies. So, for example, this is Japanese yen. And if you have a look, there's after this vertical line, we can see real auto sample, which is quite all right. So it's not bad. It's just like quite all right market, Japanese yen. It's not bad. But when we overall, and these are not just my strategies, these are also strategies of other traders, which are shared in this book. So, for example, there's E-mini S&P from Glider. I think it's from Adam who offered this for the book. So this is what it looks like. The ES. Other one on futures that we have is Nasdaq, of course. Nasdaq. Yeah, Nasdaq strategy. Other one we have is I think we have one or two more. Let me have a look.
No, that's it.
No, that's it. Yeah. So yeah. So these were the leaders. These were the leaders. Yes, Nasdaq and ES. So it's just it alone already gives another idea what it really is like. So my summary would be like this: indices or indexes or E-minis, whatever you call them. My summary of research and real life experience is there much better trendiness, so easier to make money, extremely easy to build great breakout trading strategies. If you want to start the easy way, just try futures and maybe use the model from the book that I shared on the previous slide. You can start with an account of few $1,000s with micros. We also have micros with futures, so you don't need a fortune, couple of thousands. Just watch the previous episode where we were talking about capitalization. And besides indexes, futures indexes have great transparency. It's a highly regulated environment. Whereas if you go with Forex, you need to understand that you will be in much noisier environment, less trendiness, shorter trends. So it can get more difficult to make money. It's extremely difficult to build great breakout trading strategies. Of course, you can overfit, over-optimize your equity curves on currencies and make an impression that you have a great strategy, but they do not perform well in real auto-sample trading. You can start with extremely small accounts. That's probably the only advantage, that you can start with even a few hundreds with Forex. So it's with futures, it's at least few thousands. With Forex, it's few hundreds. But the question is, what do you want to do? Like, do you want to create a really good quality, stable, professional business? Then go out, make some extra money, and consider markets which gives you better chances. With currencies, there definitely are questionable Forex broker practices, because the environment is way less regulated, and there's way less transparency. And I could be sharing a lot of stories about this. I'm not saying every broker is bad or dangerous, but among many brokers, by the way, it's quite common that brokers trade against their own clients, which is somehow semi-legal in the FX environment. But this stuff of kind of like a quote-unquote manipulation cannot happen with futures, which is very transparent, very well regulated environment. I know a lot of guys who claimed to make a lot of money on paper account with Forex trading, and as soon as they went live, it was the real opposite. And it really, I knew a few Forex brokers, and I know that they have this possibility to trade against their clients, and this possibility, it's not so easy with futures. It's completely different environment. So again, I'm not saying every broker does this or is a bad broker, but it's a bigger jungle. So again, we need to weigh the risks and the potential. If we have noisier and less regulated environment versus better trendiness and more regulated environment, up to you guys, not my choice. I already made my choice.
Yeah. So we've got a question here from Bill. G'day, Bill. Good to see you here.
Hey, Bill.
Bill says, which one has more liquidity, index futures or currencies?
Definitely currencies. But also let me ask questions. Are you managing billions of dollars? Because unless you're managing billions of dollars, doesn't matter. The liquidity between both is good enough to trade at least millions, if not tens of millions. And after tens of millions, if you want to start trading hundreds of millions or billions, then of course, then it's better to pick currencies. But who trades hundreds of billions here, right? Like,
not me, not yet.
Yeah.
Okay, we've got a question here. Thanks for that one, Bill. This one is from Obrif. Is it easier to trade the E-minis or the relative ETFs like the SPY?
E-minis, because with SPY you have basically ETFs are the regulation is same like for stocks. So for example, if you want to day trade Spider, you need 25K account. With micro futures, you need maybe 2,000-3,000 versus 25,000, and then you can have some problems shorting Spider because again it's treated as stocks. That's the stock regulation applies to ETFs, whereas with futures, E-minis, everything is super simple.
Yep. Thanks for the question, Obrif. I don't think I've seen your name here before, so welcome to the show. Thanks for the question.
Welcome. Yes.
All right, and now, so one more question for you, Tomas, here on the screen. If you were starting out in trading, what would you pick?
Yes, and the answer is I believe, quite simple. And ta-da, drum roll. I would choose, if I were in shoes of guys who want to start with small account, just try it, not risk much, see what's going on, get some experience, micro futures, start with E-mini S&P or E-mini Nasdaq, doesn't matter. E-mini Nasdaq is quite an animal, it's very volatile. I would start probably E-mini S&P or E-mini S&P 400 and try it. I believe it will be a better path than Forex, at least from my opinion, data, and experience.
Yep. We've got an additional comment from Bill. In the US, futures has more tax benefits than SPY as well. So
Okay, good to know.
I'm not a tax specialist, so we'll
That's
just
good to know.
we'll trust you on that one, Bill. Thank you for sharing.
Okay.
We've got to show this comment from Neil. If by micro S you really mean micro NQ. So Naz is not Naz.
Yeah.
Neil,
Okay.
Neil has Nasdaq
Okay.
on the mind.
Neil, no bias here, right? No bias.
We got a comment here from Nate. Thanks for sharing, Nate. I'm still trading micros. Started with 10, got up to 80 in 1 year with proper position sizing.
Oh, wow. Amazing, Nate. Congrats. Yeah.
Well done, Nate.
Very good.
Yeah.
Very good. Amazing.
All right. Well, that looks like that's the end of the questions. So thanks, everyone, for joining us today. If you liked what Thomas had to share and you enjoyed the show today, please give us a thumbs up on this video and hit subscribe and bell button so that you're notified anytime we release new content. So, Thomas, do you have any closing thoughts before we wrap up for the show today?
That's all from me, guys. Da-di-da-di-da.
All right, guys. Well, thanks for joining us. Thank you, Thomas, for sharing. And we'll see you again in 2 weeks' time. That's the end of BTA Live. Ciao.